Hi, I'm Lori Weir. I'm the co-founder and CEO of Four Eyes Financial, a Canadian regulatory technology company serving the wealth management industry. Four Eyes exists to help investors feel more confident that they're invested in products that meet their risk tolerance and financial goals. We achieve this through our digital services platform, which is built to change. We know that investors and regulators are going to have ever-changing demands, and we've built a platform to help firms meet those demands with simplicity and ease. Today, we're going to show you a 10-minute video around the CFRs with Sean Shore, who's a legal and compliance professional and an advisor to Four Eyes. He'll speak specifically to the CFRs, while our co-founder and CTO, Kendall McMenamon, is going to actually show you specifically how our solution will help you meet and address the CFRs. This is not a comprehensive review, but enough to generate questions which we look forward to answering. Now, over to Sean.
IIROC has released its version of the client-focused reforms. One of the objectives of these rules is to harmonize IIROC's approach with that of the CSA. We'll recall that the CSA released its rules back in 2019. IIROC CFRs will seek to improve investor outcomes, align client interests better with that of their dealer member, and to highlight the terms of the relationship that a client has with its dealer member. The topics covered by the client-focused reforms include know your client, know your product, and suitability. The first topic covered by the client-focused reforms is something that we're all very familiar with, and that's knowing our client. Knowing our client is going to start during the client onboarding process and is going to continue throughout the life cycle of the client-advisor relationship. It covers off areas that we're familiar with: personal circumstances, financial circumstances, investment objectives of the client, investment knowledge of the client, risk profile of the client, and others. The know your client information becomes relevant when we start discussing the obligation of the investment advisor and its dealer member to make suitable investment recommendations. This is discussed in the client-focused reforms in the suitability determination area, when prior to taking certain investment actions, investment advisors must consider certain information. That information includes the know your client information that they've gathered.
Thanks, Sean. Let's take a look at our digital services platform and how it helps dealer members keep track of KYC. As we dive in and take a look, you can see the information that's available from a client perspective to the dealer member and the advisor. You can see the client's name, their age, their investment knowledge, their employer, the occupation, and I can see information relative to their income and net worth, their personal income, that of their spouse, their liquid assets, fixed assets and net worth, and as well, more importantly, I do get to see their investment objective together with their time horizon. Two key important pieces of information when it comes to knowing your client.
The second key area coming out of client-focused reforms is known as knowing your product or product due diligence. What the client-focused reforms do is split this into two separate requirements. One requirement applicable to investment dealers and the other applicable to investment advisors. Investment dealers have what's called the product due diligence requirement. Investment advisors have the know your product requirement. Each of these requirements are a little bit different, so the requirements that are on the firm relate to having, for example, a product review committee or a product due diligence committee, and other requirements such as training or other conditions upon which a product may be sold, and approving the product. The requirements on the investment advisor relates to their understanding of what they're selling, all of which is important when we tie this into the obligation to conduct a suitability determination prior to any investment action being taken on behalf of a client.
As Sean talked about the dealer member's responsibility for knowing their product or product due diligence, we do have an offering within our platform that addresses that. So let's take a look at how we handle product due diligence. So as we dive in the digital services platform, we'll take a tour of the approved product list. Here on the screen, for example, you'll see the approved products. You can see their status, the name, the type it is, and a firm can easily add a new product to that list if they want. By selecting the add product, they can key in the name, the attributes, the asset class, the share class, the commissions or fees associated with it, and most importantly, liquidity and the day's notice required. They can add their due diligence documents and as well as prospectus. This also rolls downstream to the advisors in the field who can have access to the due diligence documents when reviewing this for clients. As well as the approved product list, you can keep track in this product list module the banned products. Advisors can have a window into cease trade orders, and you can also see a window into restricted products, and any documents or notes that could be associated related to those restricted products are also made available to the advisor out in the field. I can search the approved product list by just typing in its name or its trading symbol. I can sort by type, be it an OM, a PAR, a pooled fund, a PPN, callable bonds. I have the options. So that's a bit of the approved product list and shows how firms can help manage their due diligence requirements from a head office perspective, but also make that information available to clients downstream.
The last topic of discussion regarding client-focused reforms pertains to suitability determinations. So prior to taking a particular investment action, which includes, for example, buying or selling a security or a product, the investment advisor must meet certain criteria. 1, it's suitable. 2, it puts the client's interest first. Suitability means it's got to be suitable based on the know your client information of the client, the investment advisor understanding and knowing his or her product, any concentration issues for that particular purchase or action, the costs, and that the advisor has considered a reasonable range of alternatives.
When the advisor logs into Risk 4, they go to the pre-trade analyzer, they'd add their client, and it'd be presented with a client portfolio. Here you can see the current portfolio and the target portfolio, the changes they wish to make to that account. The advisor has the ability to add holdings and remove holdings and see that impact instantly within the pre-trade analyzer. They can screen for those assets, they can screen the universe, they can look for equities, mutual funds, ETFs based on the classification, manufacturer, the risk rating, volatility, or they can do a peer comparison for looking for a range of alternatives. They can simply type in the mutual fund and presented all the members of that category that are relative to that mutual fund. Within that peer group, I can see the size, I can see the asset class, the category, and I can see the key metrics I'm comparing against for my range of alternatives, be it the MER, the max drawdown, the return, or the risk and volatility. The power of the pre-trade analyzer being built on our digital services platform allows a full integration of our compliance alerts together with the advisor tools. So here in this example, the advisors added and removed assets to the portfolio, and they're presented with the alerts that could be impacted by the choices they've made. So for example, there's a large trade activity or transfer. The advisor can see the parameter that was set or triggered, and there's also portfolio level suitability. So this is just one sample of how integrating a digital services platform from head office and the dealer members' compliance initiatives to the advisors in the field can power the client-focused reforms going forward.
Everybody, take a deep breath. If we look at these rules and digest them one by one piece at a time, we're talking about topics that are very familiar to us. Knowing your client, knowing your product, suitability.